This is Collier Bristow's US-UK podcast. My name is Aidan Grant, and we like to use this space to talk to interesting people in the US-UK tax and estate planning world. Can I encourage you to hit that subscribe button if you're listening through a streaming platform? That way you won't miss an episode. Today we're going to think about the taxation of charities, and in particular how that applies in a cross-border context. Philanthropy often forms a core part of someone's financial planning during their lifetime and then their estate planning at their deaths. And so this is an area of particular interest and one in which the US and the UK are surprisingly uncoordinated. I am joined today by Kristen Konchnik, a partner at London-based US law firm Macklemore Konchnik. Kristen specializes in US business taxation, advising on business restructuring, startup and expansion plans, and working to align US businesses, particularly in a UK context. And I understand as part of that brief, Kristen, you also advise on US charity tax matters. Now, for those long-time listeners, you may remember Kristen's colleague, Chris Macklemore, has already been a guest on this podcast talking about US-UK will planning. Kristen, it gives me great pleasure, therefore, to welcome the first firm to have repeat representation on the show. So thank you so much for joining me.
Absolutely. Great to be here. Thanks, Aidan.
Marvelous. Look, I'm conscious that we will get to charity tax a little bit further down the line, but I do want to spend some time at the beginning thinking about charity as a concept and how the US and the UK differ, because I suspect that is some of the divergence from where the later kind of tax issues diverge. You and I had the pleasure of talking before about this podcast, and you were explaining to me really quite how different the charity landscape is within the US legal framework. So could you kind of just talk me and the listeners through kind of where charity as a legal concept arrives in US law?
Absolutely. So I think one of the things that's probably a pretty big differences between the US and the UK is that in the US, there is no sort of charity regulator per se. Tax exemption derives from US federal statute. And so it is the IRS, the Internal Revenue Service, that is sort of, at least initially, the primary quote unquote regulator, in the sense that it is the US Internal Revenue Code that tells us what is charitable, what entities qualify as tax exempt. And it is, so that is the sort of basis of the concept of a charitable organization in the US. That said, there is, in most states, there is state regulation as well. And so if a charity is soliciting in a state, has assets or employees in a state, has any other sort of nexus or connection to a state, they often are going to be required to register with that state. Typically, that is with the Attorney General's office. And again, that provides a level of state oversight, and they're often required to file financial accounts and annual returns with that state regulator. We have 50 different states, and as a result, we have 50 different regulators. But the first place that you would start is with the federal tax statute. And then you would decide whether or not you're subject to any of these specific state regulators.
So there is no singular definition of a charity absent tax law in the US. Like in the UK, we have the Charities Act, currently 2011, which has within it 13 heads of charity, which say if you are relieving the poor, health, education, we have these specific and sort of heads, and they are nothing to do with taxation. They are just the definition of charity. There is no such similar comparison to the US.
Right. The definition of what is charitable from a tax exemption and U.S. tax deduction perspective derives from federal tax law.
So in effect, it's kind of back to front that if I am trying to work out if I can qualify as a charity, I'm really doing that because I guess I'm looking for that deduction, that kind of tax efficiency, as opposed to because I will get sort of broader public recognition or access to some other form of state funding or something else. It eventually all really just boils down to the tax exemptions.
Generally, I mean, the other thing to sort of keep in mind, and we won't really talk about those today, but there are many, many different kinds of tax exempt organizations in the U.S. At civic leagues and things like this. So we're going to be talking about a very specific tax exempt organization, which is the charitable organization in the U.S.
Which is, using my background information, that would be a 501c3 we're talking about.
That would be a 501c3 that we're talking about. That's right.
And I'm presuming that is a reference to the section of the IRS's code that defines what a charity is for purposes of taxation.
That's absolute. So that is the section of the regulation of the statute, section of the statute that tells us what entities what entities qualify as what is loosely called a charity, but in the U.S. would be called a 501c3 tax exempt organization.
So if I am Googling and I want to know whether what I'm looking at is a charity, what I'm looking for is a reference. Maybe they are required to specify, I don't know, but a reference to the fact that they are a 501c3 and they will presumably have some sort of tax regulatory ID as well.
So what you would do if you were looking to figure out whether or not something that you wanted to donate to was a charity was a 501c3 tax exempt organization in the U.S., you would actually go to the IRS website. Right. The IRS website has a search tool. It's tax exempt organization search tool. You can type in the name of an organization, the state, if you know its taxpayer identification number, its employer identification number, which every charity needs to have in the U.S., then you can add that as well, and that will tell you that there's quite a lot of information on that website. Actually, that will tell you what kind of organization it is. And we'll get to that in a little bit, whether it's a private foundation or a public charity. It will also tell you, it will also have copies of tax returns, some of the tax returns that the entities have filed, and will tell you sort of where its kind of primary state and city location is. So if you were going to try and figure out whether something was an organization that would give you a tax deduction if you made a donation to it, the first place to start is the IRS website.
I guess, yeah. So actually, I'm slightly less surprised at how much sort of transparency there is in the US, because I know from my experience in the UK, we have the regulator, the Charity Commission, that keeps the register of charities, and that is just like you said with the IRS, the register that you go to wherever you want to find who the trustees of the charity are, what they state their objects, their charitable purposes to be, and you can look at some of the financial information. I had been assuming, because this is information that is retained by the IRS, that there somehow going to be less transparency. But actually, as it turns out, you can probably search for much of the same information. It's just being kept by the tax authority, not by a separate regulator.
It's certainly not kept by a separate regulator. A lot of the organizations, most of the big organizations that you would have heard of, they will also have on their websites, they will have copies of their tax returns, and they will also include their governing documents, some of them, who their trustees are. So there is no, for the trustees, for example, or the directors, there is no specific place that you can go and look for those. Those won't be they will be on the IRS website because they'll be on the tax returns.
Yeah.
But they won't be sort of separately stated.
Yeah. Question for you, which you may not be able to answer, but I find interesting that you refer to the fact that charities, that 501c3s publish their tax returns. So in the UK, the closest equivalent is that they publish their charity accounts, so I can see kind of what the balance sheet is, for example. What am I going to find out on a tax return, given that a charity is a tax-exempt organization?
You're going to find out an awful lot.
I have no doubt.
Yeah, there's an awful lot. So it'll look at, you'll know what the contributions, gifts, and grants were. You will know if it's a private foundation, you'll know who made those, because there will be a schedule of the donors. You'll know how much they're paying their staff. They're not all their staff, but their sort of top level staff. What their balance sheet looks like, whether they've paid any excise taxes, information about what activities they've undertaken. There will be a list of the grants that they will have made during the year. So there's quite a significant amount of information that'll be on those tax returns.
Is it controversial in the US amongst the sort of the high net worth community about having people's donations being public on a return, or is it just so sort of accepted? Because in the UK, I might publish my charity accounts and it might publish the amount of income they've had, but in no way does it disclose who the individual donors are.
Yep. Yeah. There's been back and forth discussion about it over the years, certainly. I mean, it is sort of the way that it works. And so, I think for the most part, people
they're used to it.
Yeah, exactly. They're used to it. And so, yeah, but there have been discussions over the years about whether or not, individuals or should be. But yeah, you can look at a tax return and see that the XYZ trust has made a donation.
Yeah, I guess or maybe a charity that is controversial in certain demographics or to certain parts of America. You know, I wonder whether someone might think twice about giving money if they knew that if someone wanted to comb through the donor records and they'd find that a person they weren't expecting, shall we say, is giving money to this charity in a way that from the UK, I have much more privacy over who I give my money to. That's sort of it's my concern and not. It feels the other way around. I feel like I'm coming from the American perspective, sort of saying it's my right to give money to whom I want, and it's not up to the anyone else to see that. But that's just the way we've grown up.
It's just and again, this goes to kind of foreshadows a little bit what we'll talk about later. But the rules differ for private foundations and public charities. So
maybe let's go to that next. Yeah.
Private foundations do have to publish those. Public charities generally don't.
Fine.
And yeah, there is. We've been talking about 501c3s, but within that, there are sort of two branches of two primary branches. There's a couple of more, but we're only going to talk about two. Public charities and private foundations. So every 501c3 is going to be classified as either a public charity or as a private foundation. Public charities, there's three different types of public charities. The ones that you might run across most often are ones that generally get at least 1/3 of their support from government institutions or what's called the general public. And those could be sort of, for example, publicly funded museums or the Red Cross, those kinds of organizations. Then there's another type that gets a significant portion of its income from membership fees, for example. So membership organizations, maybe PTAs, those kinds of things, parent-teacher associations, maybe those kinds of things. And don't get too much of their income from investment income. And then there's another kind of public charity called a supporting organization, and we won't really talk about those. But most of, so for example, your Red Cross, your Doctors Without Borders, those kinds of organizations, they will typically be the first kind of organization, and those are. But there are three. All three of those different types are public charities. A private foundation is effectively anything else.
Right.
And so those would be your family foundations, the Gates Foundation, the Ford Foundation. Those are going to be private foundations, even if they're enormous, they're going to be private foundations. And private foundations, as compared to public charities, generally are subject to much more regulation. Historically, there's been a perception that private foundations can allow extremely wealthy individuals and families to shelter income. They get a deduction for, contributions to the foundation. Amounts income that the foundation earns generally are not subject to tax unless there's sort of trading activity. So there's a perception that these could be used to inappropriately sort of benefit the original donor or other sort of friends and family of the donor. And so there is a lot more tax regulation with respect to private foundations. So they're subject to a number of excise taxes, as an example. They can't hold too much of any one business. They can't hold investments that would jeopardize their charitable purpose. So any kind of risky investments are going to be off the table. They have to distribute at least 5% of their net fair market value of assets every year. If they aren't making distributions to public charities, then they have to exercise something that's called expenditure responsibility. They also have to do this in the context of cross-border giving. So if you have a U.S. foundation that wants to donate to a UK or other organization, it's generally either going to have to exercise expenditure responsibility or get something that's called an equivalency determination. So there's a number of self-dealing rules. There's a number of different excise taxes that apply to private foundations because the goal is to, number one, ensure that the private foundations aren't using the money for inappropriate purposes, but also to ensure that they are putting that money into what is considered the general public charitable space,
Yeah.
right? Whereas public charities aren't subject to these same kinds of excise taxes, they are subject to something to a sort of an intermediate sanction rule regarding self-dealing, but none of the other excise taxes apply to a public charity.
I guess what's funny, as I was listening to you talk about that, I was thinking sort of, what is the purpose of oversight? Because you're exactly right. I can see why, if you're coming at this from a sort of a taxation perspective, you want to make sure that those organizations that are more likely to be used for, let's call it tax planning purposes, that you have that additional oversight. Whereas I'm thinking from my perspective as a UK advisor and the operation of the regulator, the Charity Commission, it's as much about oversight to make sure that funds are applied properly for the public good, disposed of in the correct way. And in some respects, a large public charity I could see as being the charity that needs greater oversight, because they're the ones taking lots of public money and expending it and on lots of different things. And it comes up once a year, a couple times a year. There are charities who get pulled up by the regulator for not using their funds in an appropriate way. It's nothing to do with the taxation, but it's kind of regulating the proper conduct and administration of charities. So it's just funny to see, from your perspective, the focus on the regulation of charities to sort of manage the tax aspect of it, as opposed to managing the operational governance of charities, so to speak. It's an observation.
Yeah, I think that's generally right. I think there is the tax return for a charity does have a little bit of that sort of oversight as well, in the sense that there will be there will be, like with the private foundation, there will be places on the tax return to talk about what you're doing and
Mm-hmm.
who you're giving money to. But you won't, there isn't, because there isn't sort of a charity regulator, the person who's going to be doing that is your state regulator,
Right.
right?
Okay.
The attorney general in your state, that, or whatever state, they're the ones who are going to be making sure that the charity is doing what it should be doing, if there is a regulator in that state, because there are a few states where there isn't a regulator of that sort. But that's where the charity commission sort of regulation piece of it would come in. If the state attorney general doesn't think that the charity is doing what it should be doing, or acting outside of its objects.
I figured there must at some point be some level of oversight, but I appreciate, probably. So you've got a federal system, and every state will have different rules, and so they will have it done on a state by state basis rather than a national basis.
That's right. And so some organizations aren't going to be subject to much of that regulation at all. If, for example, they only operate in one state, they might not. They'll have their state regulation if their state has a regulator, but otherwise it will be the federal regulation.
So, just thinking about the practicalities of setting up and running charities, and as I'm starting to think about some of the issues that come in cross-border planning, in isolation, from a US perspective, how difficult or how high a bar is it to get that 501c3 recognition? If I've got an organization that's bringing in, I don't know, $5,000 a year, $10,000 a year, $50,000 a year, is there a point at which does an organization have to have a certain amount of critical mass before you would bother or go to the effort of the 501c3 setup and administration cost? Because in the UK, I've kind of got there. In fact, there is an obligation on an organization that is charitable. If it has more than £5,000 a year of annual income, it must register with the UK Charity Commission. Are there similar sorts of thresholds, practical or legal, in the US?
Yes, absolutely. Generally, all charitable organizations, other than churches, and I believe organizations that have less than $5,000 of income, are required to apply to the IRS for tax exemption. If they don't, they are not tax exempt. And so there is absolutely a registration requirement and has been for some time.
That's interesting. So there's a phrase my colleague Daniel Simon likes to use and has drummed into me over the years I've worked with him, that from a UK perspective, registration with the Charity Commission confirms, it does not confer charitable status. Charitable status is confirmed by dint of qualifying within the Charities Act's definitions of what a charity is. You then just have that conferred and sort of stamped on you as a seal of approval by the Commission, because we have that sort of separate statutory definition. Um, I am sort of reassured to hear that it's not a high bar. Is the additional administration requirement for a 501c3 on a sort of annual operating basis particularly onerous relative to, a normal sort of company, let's say?
The application process is very detailed. The application itself is extremely detailed, and there's a lot of information that needs to be provided. So, for example, generally you have to provide 3 years of projected revenue and expense information on the application. I would typically say that unless you are expecting the organization to receive a certain threshold of income per year, you might want to be thinking about other ways to exercise the charity that you want to exercise, and that a 501c3 may not be the right thing for you. There are ongoing compliance requirements. If you are regulated by a state, you will have annual reporting to the state. You'll have annual tax filings to the IRS. In addition, and I don't know how it works in the UK, but you generally have to provide sort of contemporaneous documentation to any donor to sort of confirm their tax deduction. So they're not going to be very happy with you if you don't provide that. So there are sort of contemporaneous written documentation requirements to qualify for a deduction. If you're doing anything a little bit more complicated, for example, someone makes a donation and they get a tote bag, there are rules about how much you have to value the tote bag at, and all of this kind of thing. And I think I also think that just generally the level of excise tax, there's a 1.39% investment income excise tax that applies even if you haven't done anything wrong, right? So even if the charity hasn't done it, all of its investment income is just subject to this excise tax. It's sort of in exchange for not having most of the rest of your income subject to tax, you're going to pay us this instead. And that's a private foundation thing, not a public charity.
Sure.
But if we're talking about $100,000 of income per year, we're talking about a private foundation, almost certainly.
Sure.
So that, to me, I would be suggesting that the client thinks about whether or not there is another alternative for that.
So, I mean, the reason I was sort of leading the witness with that question was, sort of turning it towards a cross-border context, because what you will have undoubtedly seen and we see is, let's say you have a UK charity who is thinking about expanding operations or a donor base into the US or vice versa. One of the questions we will get asked quite frequently is, should I, re-register my UK charity as a 501c3? Or we will talk to US charities who say, should I, register my 501c3 with the UK Charity Commission? And certainly my general premise is probably not. There's probably another way of achieving the same goal to dual registering in both countries. It's not to say it doesn't ever work, but it's generally not a process you'd recommend either, I think.
No, it's certainly not something that we would recommend to have a UK or any other charity register with the IRS. It's possible. It can, it certainly can be done. And a lot of times organizations want to do that or are looking to do that because they have a potential US donor that is saying, well, but I don't know if you're a public charity and I'm a private foundation and I'm subject to these excise taxes. I don't want to get an equivalency determination or exercise expenditure responsibility. So if you register with the IRS as a 501c3, then I don't have to worry about that. And the problem is that registration with the IRS effectively opens the UK charity to possibly having to file a US tax return for the rest of its existence. And it also doesn't, and I think it's important to note this because I think it's similar in the UK, it also doesn't mean that deductions to that UK charity would be tax deductible for an individual making a donation. So even if your UK charity has registered with the IRS, if I wanted to, as a US taxpayer, if I wanted to make a donation to that organization, it still wouldn't be deductible because the US has a local organization requirement. In other words, for income tax donations, the the donation must be made to an organization that is organized in the US. And that wouldn't be the case with the UK charity, even if it's registered with the IRS.
Yeah, and here is, and thank you, Kristen, because you've teed me up quite nicely. Here is where we will come to in the second part, is starting to think about where this coordination starts to apply in practice. What's the sharp end of the wedge when we start to think about, from a donor's perspective as well as from the charity's perspective, where we get this mismatch, and trying to highlight some of those consequences for individuals and maybe start to offer some idea about potential solutions. So what I'd like to do, if it's okay, Kristen, is I'd like to sort of take a pause now. We will come back in a part 2 for this discussion where we will think about charity taxation more directly. But in the meantime, thank you so much for joining us for this part 1.
Absolutely. Good to be here.